Silver is a much easier market for the bullion banks and the central banks to control because it's a smaller market. I think they're running out of rope because there's a lot of physical, real demand for silver from China, India, and other countries. And eventually they'll have to cover these massive short paper positions that they're trying to defend right now is around 32.50 or even 33. I think we almost touched 33 a week or 10 days ago. I do expect eventually silver to outperform gold.
In his video, Mario Innecco highlights the ongoing trend of central banks being active buyers of gold, motivated by financial and strategic reasons to diversify their reserves. This strong demand has played a key role in supporting gold prices, especially during the high global interest rate environment in 2022 and 2023. According to the World Gold Council, central banks acquired 1,370 tons of gold in 2023, slightly below the record 1,820 tons bought in 2022. Major buyers like China and Poland have contributed to pushing global reserves to 36,700 tons, with over 25% of this gold accumulated since 2010 being acquired in the last 2 years. The trend is expected to persist into 2024, with 483 tons already purchased in the first half of the year. While gold remains a cornerstone investment, Innecco emphasizes the growing recognition of silver as a compelling alternative. The silver market, traditionally prone to manipulation due to its smaller size, is now seeing a significant rise in physical demand, particularly from countries like China and India. This surge is creating supply constraints, complicating efforts for investors holding short positions and trying to suppress prices. Recent efforts to stabilize silver prices within the $32.50 to $33 range underscore the challenges posed by market manipulation, with analysts predicting an imminent breakout that could lead to a substantial price increase. Innecco also draws parallels to historical episodes of price suppression, such as the 1970s, when allegations of central bank collusion aimed to keep gold prices artificially low. He points to a notable meeting between then Federal Reserve Chairman Paul Volcker and Vatican Treasury officials, suggesting that such interventions may have deepened price declines, even though gold ultimately rebounded to new highs. Innecco predicts a significant breakout for silver, backed by technical indicators signaling an imminent price surge. He stresses the importance of tracking money supply metrics like M1 and M2, which are expected to drive up prices for both gold and silver in the near future. Since 2022, we've witnessed unprecedented net buying by central banks, reaching levels not seen since the Bretton Woods Agreement in the 1940s. This trend continued last year, with central banks maintaining almost the same pace of gold purchases. It's not just the BRICS nations leading this charge. Countries like Poland and others beyond the BRICS are also making substantial gold acquisitions. These nations are aware of the current global climate and are understandably wary about keeping their reserves in the US or Europe, where they fear the assets could be frozen or confiscated. Take Russia, for example. They've ramped up their gold reserves to about 31.5% of their total reserves, with a goal to increase this to 40%. This indicates a commitment to further gold purchases. It's also essential to recognize that reserves can fluctuate due to international trade dynamics, so he don't anticipate a slowdown in this trend. Eventually, he believes Western countries will need to respond and catch up. When we look at the gold market, it's clear that central bank activity is a major driver of current prices. The retail market in the West isn't particularly robust right now, but there are signs of growing interest. For instance, Costco has started selling gold, and reports show they're quickly running out of stock. This indicates a budding consumer interest in gold, not just in North America but across Europe as well. Combining central bank purchases with this rising retail demand suggests we might be on the cusp of a gold boom. Additionally, there's significant physical demand for silver coming from countries like China and India. The market will eventually have to contend with the substantial short positions in silver. Currently, the critical price level to watch is around $32.50 to $33, which we nearly hit about a week or 10 days ago. He expects silver to eventually outperform gold, but it's important to keep in mind that silver will likely experience much greater volatility as it rises and falls. In a recent video, Mario Innecco discussed the growing momentum of the BRICS alliance, with numerous countries expressing interest in joining. Russian President Vladimir Putin has indicated that as many as 34 nations are contemplating membership. As BRICS countries amass gold reserves at unprecedented levels, speculation is intensifying about the potential establishment of a gold-backed currency. This trend is not confined to BRICS nations. Countries like Poland are also increasing their gold purchases due to concerns that reserves held in Western institutions could be vulnerable to freezing or confiscation amid ongoing geopolitical tensions. In 2022, central bank gold purchases hit historic highs, marking the largest annual total since the Bretton Woods era. This underscores the growing desire among nations to diversify their reserves and reduce their dependence on the US dollar. Mario Innecco further elaborates that gold is not only appreciating against the US dollar, but is also gaining value compared to other major currencies, including the euro, British pound, and Japanese yen. He argues that countries can use gold to settle trade and eliminate debt in a gold-backed system. A crucial detail often overlooked is that, unlike fiat currencies, which can perpetuate debt and inflation, gold and silver are tangible assets that can truly settle financial obligations. This reinforces their appeal as viable alternatives in a rapidly changing economic landscape. Mario Innecco believes there will be an announcement regarding a new trade settlement mechanism, although it may not specifically be a currency. He anticipates they will refer to it as the unit, and the plan is for it to be 40% gold-backed, with the remaining 60% supported by various fiat currencies. For instance, if a country holds 40% of its reserves in gold, the other 60% would consist of different currencies. There will likely be limits on how much of these other currencies can be included. While Mario Innecco's uncertain about the timeline for when this will be fully operational, he have noticed that trade among BRICS Plus countries has decreased to around 30% in terms of transactions conducted in dollars and euros. This trend is growing. The choice to use gold stems from a desire to move away from the dollar, as gold is the only truly reliable monetary reserve. For the past 50 years, many have been misled into believing that dollars and U.S. treasuries are safe assets. The real issue here is that people are beginning to recognize the power of nations outside the West. As they seek alternatives, they are likely to turn to gold. This realization is already unfolding. Gold is rising not only against the dollar but also against euros, British pounds, and Japanese yen. In fact, the price of gold is approaching 400,000 yen per troy ounce. Additionally, Mario Innecco's seen reports indicating that Russia now holds 31.5% of its reserves in gold, and this figure is expected to continue rising. This shift will undoubtedly create challenges for Western government bond markets, not just for U.S. treasuries, but also for UK gilts and European bonds. Countries are starting to reduce their purchases of Western government securities as they transition to a gold-backed system, which will place upward pressure on bond yields. They've observed rising bond yields since the Federal Reserve cut rates on September 18th. This could reflect market sentiment that the Fed has made significant cuts, especially considering that inflation remains relatively strong. Moreover, a decrease in demand for U.S. paper currency is also influencing this trend. As you know, fiat currencies cannot be repaid without increasing debt. However, in a gold-backed system, trade can be settled and debts extinguished using gold. What many people don't realize is that gold and silver, too, can be used to settle debts. When someone presents a promissory note or fiat currency, they can receive gold or silver in exchange, effectively settling the debt. In Mario Innecco's video, he discusses silver's potential for significant growth. He notes that silver has successfully tested the upper boundary of its expanding consolidation pattern from May to September 2024, indicating a bullish breakout. By maintaining its primary uptrend and benefiting from a positive correlation with gold, silver is well positioned to capitalize on this momentum. Do you agree with Mario's predictions and analysis? I'd love to hear your thoughts on the video. Don't forget to like, subscribe to the channel, and turn on the notification bell for more content like this. Thanks for watching, and we hope to see you in the next video.